And thank you for joining me here today. Just a quick recap of markets. U.S. stocks ended solidly lower on Thursday, with shares of Tesla falling and Treasury yields surging as investors digested comments from U.S. Federal Reserve Chair Jerome Powell. Here's more.
U.S. stocks seesawed to end lower on Thursday, with shares of Tesla down sharply and Treasury yields surging after Federal Reserve Chair Jerome Powell spoke about monetary policy and investors worried whether rates would stay higher for longer. The Dow shed 0.75%, the S&P 500 lost more than 0.8%, and the Nasdaq dropped just under 1%. Powell said at the Economic Club in New York that U.S. central bankers were moving carefully on policy after aggressive rate hikes last year, but he added that the economy's strength and continued tight labor markets could warrant further rate hikes. Wall Street's main indexes soared, then slumped after Powell's speech, something Eric Lynch, managing director at Scharf Investments, called a microcosm of the past year.
The market's been kind of like stumbling around trying to figure out what's happening. Is there a recession? Is there not? When's inflation going to come down? I think what Powell said today was continuation of the same message. It was therefore both positive and negative. Positive in the sense that he referenced, solid growth. Negative in the sense that he said, probably there's still more work to do.
Treasury yields rose further, and the benchmark 10-year note yield was at a 16-year high of almost 5%. In company news, Tesla shares plummeted more than 9% a day after CEO Elon Musk said that higher interest rates would hurt demand for electric vehicles. Netflix shares jumped more than 16% on the heels of third-quarter earnings results, in which it said it added nearly 9 million users and announced a price hike for some of its plans in the U.S., Britain, and France. And shares of American Airlines rose just under 1% after the company posted upbeat quarterly results.
And big news out of China today. Officials said it's going to restrict exports of a key mineral used in EV batteries. China said today it's going to require export permits for some graphite products to protect national security. This is its latest move to control supplies of critical minerals in response to challenges over its global manufacturing dominance. Here are the details.
New restrictions announced in China could be unwelcome news for the growing electric vehicle market. Beijing said on Friday it will require export permits for some graphite products to protect national security. It's the latest move by the country to control supplies of critical minerals in response to challenges over its global manufacturing dominance. The reason this might hurt EV makers is because China refines more than 90% of the world's graphite into the material used in virtually all EV battery anodes. That's the negatively charged portion of a battery. One analyst said South Korean firms heavily rely on the graphite imports from China, but would have to look elsewhere to the US or Australia, and that would likely raise the cost burden for many. Automakers are now racing to lock in supplies from outside China, but there could be shortages. China will now require, as of December, that exporters apply for permits to ship two types of graphite. Beijing said the move was conducive to ensuring the security and stability of the global supply chain and safeguarding national security. China's decision comes while the EU considers tariffs on Chinese-made EVs, which it argues unfairly benefit from subsidies. The US government also widened curbs on Chinese companies' access to semiconductors earlier this week. Analysts said it was not clear how much impact the new measures on graphite will have in the short term. But on Friday, shares in China's new energy vehicle and battery makers rose after the announcement.
An ailing Chinese property developer, Country Garden, has global markets on edge over whether it's going to default. But the firm's problems are also felt by ordinary folk a long way from China, as the tale of one Australian suburb shows. Here's the report.
Susie Brandstater is a long way from China. She's a local politician in the small Australian town of Wilton, about an hour outside Sydney. And yet she's feeling the effects of trouble at the giant Chinese property developer Country Garden, which was supposed to build a huge new residential community in Wilton.
Now, to me, when you are building a new city from scratch, greenfield development, there is room and time to get it right and have all that infrastructure in place before the people come.
The Wilton Greens development was supposed to feature 3,600 homes, but 4 years after it was announced, fewer than 50 houses are under construction. The promised parks, sports fields and school haven't materialised. And now Country Garden has put most of the project on the market. It all comes as the firm struggles with its debts. This week it missed bond interest payments, putting it on the brink of default, and the fallout reaches well beyond China. In Wilton, quantity surveyor Stuart Bullivant says it's literally causing a stink.
As you can see, this construction already started. However, the infrastructure hasn't been provided as promised, meaning that the sewage is draining into a tank, which means that there'll be multiple truck movements all through day and night to empty out the wastewater, because there is no on-site solution.
The problems are symbolic of the changing fortunes at Country Garden and Chinese rivals. They borrowed on a massive scale to fund huge developments at home and abroad. But such firms have struggled since Beijing moved to rein in the borrowing spree. Now creditors are circling, seeking emergency debt restructuring at Country Garden. The people of Wilton would just like the homes they were promised, and a sewage system to go with it.
And now here are some of the week's big stories from the AI revolution, from Nvidia teaming up to Washington getting tough.
From Washington getting tough to bots learning brain surgery, this is Generation AI. Foxconn and Nvidia are teaming up. The tech giants say they will build a new kind of data center using the US firm's chips. Nvidia boss Jensen Huang calls them AI factories.
This is a factory that takes data input and produce intelligence as an output.
He says they'll continuously process data from electric vehicles to make them smarter. The US has set new limits on exports of advanced AI chips and other semiconductors to China. The curbs are also extended to countries including Russia and Iran. Washington says it's to slow China's military development, but Beijing says it's really meant to suppress Chinese companies. AI is helping to train brain surgeons in the UK. A system developed at University College London highlights critical structures in the brain to bring them to surgeons' attention. Hanny Marcus is a consultant neurosurgeon.
What this practically entails is us training the AI with hundreds of videos, telling it, if you like, what structures are what, and then at some point over that period, the AI becomes really good itself at recognizing things and able to support other surgeons who are perhaps less experienced in advising them what to do next.
China's Baidu is fighting back in its battle with OpenAI. It's unveiled an updated chatbot meant to match ChatGPT. Boss Robin Lee showed Ernie 4.0 writing a martial arts novel, among other feats, but analysts said the new iteration lacked dramatic upgrades. And generative AI firms are now the biggest source of unicorns, startups valued at over $1 billion. Venture capital firm Excel crunched the numbers. It says Europe shows signs of closing the gap with the US on funding for new AI projects.
Now, more than 71 million Americans receive Social Security and Supplemental Security income benefits. And starting in 2024, those recipients are going to see a new cost of living adjustments. Here's what the impact might be.
Seniors who receive Social Security benefits are going to see a smaller bump in their checks in 2024. 3.2%, the Social Security Administration announced last week. That's smaller than the inflation-fueled increases seniors saw over the last 2 years.
3.2% is literally better than nothing. We would prefer that it was higher, of course.
In 2023, the cost of living adjustment was 8.7%, which was the largest in more than 40 years. Starting in January, retirees' monthly payments are expected to be an average of $1,907, an increase of $59. Shannon Benton, the executive director with the Senior Citizens League, an advocacy group, says the inflation gauge is based on price changes for urban wage earners and clerical workers rather than the spending habits of seniors.
In a recent survey by the Senior Citizens League, 80% of participants said that they think Congress should beef up inflation protection by providing a cost of living adjustment that more accurately reflects their spending habits.
Many elderly Americans are worried these benefits won't cover their basic living expenses.
We used to be able to say, well, you know, if you can't afford beef, we'll get chicken. If you can't afford chicken, you can get pork. But right now, everything is a lot higher than it was several years ago.
And it seems like it's becoming increasingly cheaper to buy gas in the U.S. AAA says the average price for a gallon of regular has dipped 8 cents since last week. It's down 32 cents from a month ago. That's despite increased demand and decreased supply in the U.S. One factor is that states are switching to cheaper winter blends. Another is that the cost of oil remains flat despite the war in Israel. AAA predicts oil and gas prices could rise if the fighting in the Middle East spreads. Elon Musk said on Friday social media platform X, formerly known as Twitter, will soon launch 2 new tiers of premium subscriptions. Here's the story.
A new subscription model is on the way for X users. Company owner Elon Musk said Friday he will soon launch 2 new tiers of premium subscriptions. He posted on X, formerly known as Twitter, that one is lower cost with all features but no reduction in ads. The other, he said, is more expensive but has no ads. Musk didn't give more detail on the plans. Earlier this week, X started charging new users $1 in New Zealand and the Philippines as a test case for accessing the platform. New users who opt out of subscribing will get read-only access. X said that includes reading posts, watching videos and following accounts. Its not a bot subscription method aims to reduce spam, manipulation of the platform and bot activity. It's now a year since Musk took over the social media giant. He made rapid changes with mass layoffs and the disbandment of content moderation teams. That's led some advertisers to halt marketing on the service. Musk has acknowledged X has taken a hit on revenue and blamed activists for pressuring advertisers.
Elon Musk's warning that high interest rates could sap electric vehicle demand knocked shares of the sector on Thursday, with Tesla set to lose about $70 billion in market value. Take a look.
Shares of Tesla and other electric vehicle makers plummeted on Thursday, a day after Tesla CEO Elon Musk warned that high interest rates could sap consumer demand. The world's most valuable automaker sank more than 9% and was set to lose about $70 billion in market value. On a post-earnings call Wednesday, Musk said he wanted more clarity on the economy before ramping up a planned Tesla factory in Mexico. His concerns? High borrowing costs that could deter consumers and, quote, paycheck-to-paycheck pressures on American workers. The comments marked a change in tone from Musk, who last year said his company was, quote, recession resilient. The EV maker missed quarterly revenue estimates by the most in more than 3 years despite hefty price cuts. Tesla is not the only EV maker worried about demand. General Motors this week said it would delay production by a year of its Chevrolet Silverado and GMC Sierra electric pickup trucks at a plant in Michigan. Ford last week said it would temporarily cut 1 of 3 shifts at a plant that builds its F-150 Lightning pickup trucks. The automaker in July already slowed its EV ramp-up, shifting investment to commercial vehicles and hybrids. And EV startup Lucid reported a near 30% plunge in third-quarter production this week, while Amazon-backed Rivian, which makes electric pickup trucks and SUVs, also disappointed investors this month when it shied away from raising its full-year production forecast. Shares of Lucid and Rivian were down roughly 3% and 4% respectively in Thursday afternoon trading.
George Clooney and other top Hollywood stars have offered $150 million to the SAG-AFTRA Actors Union in hopes to bring an end to the months-long strike. Take a look.
Actor George Clooney and other top Hollywood stars have offered $150 million to the SAG-AFTRA Actors Union as part of a proposal to end a strike that has lasted almost 100 days. Clooney's spokesperson confirmed the offer on Thursday, saying the money given the union over the next 3 years could help fund improved health benefits. Having better health benefits has been one of the union's demands during negotiations with major studios like Netflix and Warner Brothers. The entertainment news site Deadline first reported the story, citing Clooney as saying that, quote, a lot of top earners want to be part of the solution. He also said top stars would only collect residuals once lower-paid actors received theirs. A SAG-AFTRA spokesperson didn't immediately respond to a request for comment. Clooney's remarks come after talks between the union and the Alliance of Motion Picture and Television Producers broke down last week. Members of SAG-AFTRA have been on strike since July, disrupting TV and film production, which has left thousands of crew members and actors without work. Early this month, the Writers Guild, which had been striking in parallel, ratified a new 3-year contract with salary increases as well as better health benefits and pension funds. They were on strike for 148 days.
And Finnish telecom gear group Nokia will cut up to 14,000 jobs to reduce costs. It said this on Thursday after weaker demand for next-generation 5G equipment lowered third-quarter sales by a fifth, adding it did not expect a market recovery soon. Here are the details.
Nokia workers face massive job losses. The Finnish telecom group said Thursday it will cut up to 14,000 posts to reduce costs. Nokia said third-quarter sales were down by a fifth due to weaker demand for next-generation 5G equipment. Quarterly comparable net sales fell to about $5.2 billion, missing estimates. The company called the market challenging and said it didn't expect a recovery soon. Net sales were down 40% in Q3 in the North American market, which Nokia calls its most important. Both Nokia and rival Ericsson have endured slower sales in the US. They've tried to offset this with higher sales in India, but it's a low-margin market. Nokia aims for savings of up to $1.26 billion by 2026, with around a third of that amount to come next year. However, despite Thursday's negative news, the company did not cut its full-year outlook. Nokia shares fell as much as 5% in early trade Thursday, before recovering some ground.
And Netflix increased subscription prices for some streaming plans in the United States, Britain, and France on Wednesday. This is as it shattered expectations for new customers, sending its shares surging 13%. Here's more.
Netflix is raising prices again. In the US, the top-tier ad-free plan now costs $22.99 per month, up by $3. The changes were rolled out Wednesday alongside an earnings report that also announced Netflix's strongest quarterly uptick in new customers since health crisis lockdowns began in 2020. The video streaming giant gained 9 million new subscribers globally in the third quarter this year, hitting a total of 247 million by the end of September. That increase far surpassed analyst estimates and sent Netflix shares soaring in after-hours trade. The subscriber gains came after a crackdown on password sharing, while Netflix also touted successes from new shows such as the live-action remake of manga series One Piece. Legal drama Suits, starring Prince Harry's wife Meghan Markle, also became the most-watched title across the US after it hit the platform. Netflix told shareholders it sees increased opportunities to license more hit titles. It now forecasts a fourth-quarter revenue of just under $8.7 billion, slightly below expectations. The writer and actor strikes prompted the firm to revise its projections on content spending. It now expects to spend $13 billion in 2023, down from an earlier estimate of $17 billion, assuming the studios reach a settlement with striking actors in the near future.
More driverless cars are hitting the road, but there are renewed concerns about safety after several recent crashes involving robotaxis. Federal investigators want to know if automakers have enough safeguards for pedestrians in place. Here's a look at this expanding market and how it can impact the roads near you.
The future is here, but is it a good thing? Several recent crashes involving driverless cars are reigniting safety concerns.
These are big vehicles that can inflict damage if there are crashes or if they hit pedestrians and bicyclists and so on.
Earlier this month, a woman in San Francisco was struck by a hit-and-run driver and then hit a second time by a robotaxi operated by Cruise, a subsidiary of General Motors. In a statement, a Cruise spokesperson said the initial impact was severe and launched the pedestrian directly in front of the AV. The AV then braked aggressively to minimize the impact. It's one of two such incidents reported to the National Highway Traffic Safety Administration, which said it also identified two further incidents. Engineering professor Ram Pandiala says it makes sense. Federal investigators want to know if the company has enough pedestrian safeguards in place.
This is NHTSA just exercising due diligence, as with all vehicles and all technologies.
A Cruise spokesperson said it will cooperate with the probe. Pandiala lives in Arizona, where robotaxis operate.
A lot of folks who take those rides, they are surprised as to how amazing the experience is. I think we'll just have to see how the data really demonstrates the potential benefits from a safety standpoint.
And Taiwanese chipmaker TSMC posted a 24.9% fall in third quarter net profit on Thursday. This is as global economic woes hit demand for chips used in applications from cars to cell phones and services, and coming off a high base last year. Here's more.
Profits have tumbled by almost a quarter at chip giant TSMC. But that was actually less bad than analysts feared, sending shares in the firm higher in Thursday trade. The world's biggest maker of chips for other companies saw a downturn as demand for smartphones and other gadgets declined from last year's high levels. Now the Taiwan-based firm must also navigate the US crackdown on chip supplies to China. As the biggest maker of advanced semiconductors, analysts say it looks exposed to the trans-Pacific tensions. TSMC is pressing ahead with expansion plans, however, including a $40 billion factory in the US state of Arizona. Last month, Taiwan President Tsai Ing-wen hosted State Governor Katie Hobbs in Taipei.
Arizona could not be more proud to be the site of TSMC's US-based fabrication operations.
Hobbs said TSMC was also in talks over advanced chip packaging in the state, though that wasn't confirmed by the company. Asia's most valuable listed firm is a major supplier to Apple and other big names like Nvidia. In the third quarter, it saw net profit come in at around $6.5 billion, down just under 25% on a year ago. Revenue dropped almost 15%, in line with the company's own forecasts.
And that's all today for NTD Business. Thank you for watching, and we'll see you next week.